Hey, we're on.
Good afternoon, everybody. I'm sorry, I just had a dark chocolate espresso bean, and it's pretty good.
Yeah, it is pretty good.
Maybe need something to wake us up here before we get started. Well, welcome to the September 2nd edition of the Jack and Bill Show, live from Shreveport, Louisiana. So the last time we spoke, and I think it was 2 weeks ago, Bill was out. Um, you can reference this. Wesley had a wonderful picture of a plane coming in for a landing, and we entitled it The Soft Landing Rally. Since then, and we had a very nice rally underway. We had talked about this previously, Goldilocks, if you remember.
Oh yeah.
So we're looking for market information that market data that's not too good, even really if it's leaning to not too bad, but a little bad. That's probably the most ideal economic situation and market situation to get interest rates lower and thereby continue to prop up equities and keep the party going. Well, this was replaced by the Jackson Hole sell off. And
Not
that's
not the Jackson, Mississippi water crisis.
there's a Jackson, Mississippi. Yeah. And No, Jackson Hole, Wyoming. The Fed meets there every year with world world banking financial leaders, and all ears were pinned to Jerome Powell's comments the last day. And what happened was had a big 3% sell off, and there was a sentiment that shifted from soft landing rally to, hey, Jerome Powell appears to be serious about fighting
Hmm.
inflation.
He means what he says.
And again, the dual mandate, again, as you pointed out on a previous show, Bill, there used to only be one mandate,
Correct.
and
Price
that was
stability.
inflation. And then we got in there inflation around 2%. Then they worked in the maximum employment, and then a lot of people say since Ben Bernanke we had an unwritten third mandate, which is get a wealth effect from keeping the stock and bond
Yeah, it
markets
seems
propped up.
with every additional mandate, the government is more and more involved in our free market economy.
Totally agree. So it brings into question what is a free market economy, and I think you could ask that question. Take a look at Japan, Europe, Western Europe, or the United States. And so this actually continued. We had a good we had a nice rally going today until yesterday. I read that the G7 has come up with a plan to combat Putin and what Russia's doing with European gas prices. So this is going to go hand in
Hmm.
hand with our
Yeah.
comments and storyline for today.
Well,
So,
and their plan, in a nutshell, is price controls.
yes, yes, price controls, and Putin has already said,
No way.
"No way, Jose." And at about 2 o'clock this afternoon, Putin did some saber rattling, and the markets went from up 1% to down 1% very quickly on the increased probabilities or view that
Mhm.
actually I think he announced that there's a leak. Gazprom said there's a leak in the Nord Stream pipeline, and they're going to have to shut it down. And that's I believe that's about as truthful as the Wall Street Journal headline that I read of the chairman of Luke Oil had a heart attack and accidentally fell out of a 6-story building yesterday in Russia and died.
And Jack, you may not have seen this. This just broke this afternoon because the 3-day shutdown of this pipeline. It's a major pipeline, and it sends natural gas from Russia to Germany, and so it's supplying Western Europe with Russian natural gas, and Europe imports about 40% of natural gas from Russia. But this was a planned 3-day shutdown for maintenance, and the news broke this afternoon that Gazprom, the Russian gas company that operates the pipeline, will not be reopening Nord Stream after the maintenance is concluded. So this is akin to economic blackmail by Putin.
And they're selling all the gas they can get out of the ground too. So that's another thing we're going to talk about today. So the carnage, the Jackson Hole sell-off, and the reversal of the soft landing rally continue today with the S&P down 1.07%, and I think that has us now down 17% year to date on the S&P 500. NASDAQ fell a little bit more, 1.3%. By the way, that's 6 days in a row that the NASDAQ has declined after the other two indices were up marginally yesterday. That's the longest, 6 days in a row is the longest streak of declines in over 3 years.
And that's something we've talked about in the past with rising interest rates, long duration assets, be it long dated bonds or growth equities, get hurt the worst.
That's right. And that could be exaggerated or exasperated. Anyway.
Something aided.
I just learned the quantitative tightening, or the reversal of all this QE since Bernanke, began yesterday. And it's rumored that the Fed is selling these bonds held on the Fed balance sheet back to the marketplace. And notice the 30-year Treasury yield was up today with other yields down. And so I think there's some evidence. The rumors are that they're going to be selling mostly 20-year and 30-year. You know what's interesting, Bill? So the 30-year Treasury bond closed today to yield around 3.36, and the 20-year is at 3.69. So if I were doing, I don't know, I wouldn't be doing quantitative tightening with the 20-year. I'd probably be more focused on the 30-year. But anyway, I don't know what rhyme or reason or tactical strategies they have with that. But I think in the long run, it's going to bring about higher interest rates. So safe havens up today, silver up about 1%, gold 0.5%, something like that. We came out this morning with a big economic release on the jobs for the month of August. Came in at 315,000. That's pretty much in line.
Mm-hmm.
But down a couple of 100,000 from last month.
Yeah, so it still fit the Goldilocks narrative.
Yes, it did. It fit the Goldilocks narrative. So this is actually decent news. I'm going to make a radical speculation and say that with this week being rather ugly, or say the markets the last couple of weeks, I'm going to go out on a limb and say we probably bounce back next week. But anyway, Bill and I have come across, there's a gentleman named Zoltan Pozar. I'm not sure if I'm pronouncing his last name right, but he works for CS First Boston, Credit Suisse First Boston. He lives in New York. He grew up in Hungary, born in 1979, and he probably has the hottest reputation, rock star following of any strategic economic analysis writer, speaker in a long time.
He's
worked,
actually head of their short-term interest rates division.
yeah,
But his claim to fame is his macroeconomic writings.
yes, and he has a unique perspective. I was getting to in that he was born in Hungary in 1979. That's 10 years prior to uh, the fall of the Berlin Wall. So he
Yep.
was on the east side, grew up with a very different perspective than Westerners, was educated in Hungary and Sweden and London and the US, and he's a medical doctor and has a bunch of degrees. But so he's a 43-year-old rock star that writes about financial things. And he wrote one August the 24th entitled War and Industrial Policy that a buddy of mine sent to me.
We posted it on our Facebook page, so it's there if you would like to read it.
Oh, that's awesome, William. And so I'm going to have another espresso bean while you get us started on what's intriguing or what do we want to share about this.
Sure. We do talk quite a bit about macroeconomic subjects because one, we find it interesting, but two, we find that macroeconomics does influence financial markets, and while some in the investing circles like to take a bottoms up approach with their investing, strictly looking at a company's financial statements and ignoring what's going on in the world, we find that to include global macroeconomic analysis helps you to be more informed in your investing. So Zoltan, he wrote this article. It's dated August the 24th. As Jack said, it's entitled War and Industrial Policy. And he references a book entitled Economic Interdependence and War, written by an American scholar named Dale Copeland. And it's a very interesting book. I haven't read it, but just from what I have, the snippets I've read about the book, it does seem like a very interesting read. But there's two very opposing views on global economic interdependence, and one view is that commercial ties, trade, and investment flows raise the opportunity cost of nations going to war, and so we've been in this environment of interdependency, and perhaps that has kept major economic powers in a period of détente over the decades. But there's another view that these interdependent relationships can make countries more vulnerable to cutoffs, which can devastate their economy and prompt the leaders of those countries to go to war. Well, the author of the book, Dale Copeland, writes that there's a third variable, and that is expectations. And he calls it the theory of trade expectations. And that is simply that if economic expectations are overly negative, then that dependent state might view war as the rational option or the lesser of two evils. And we saw this in the 20th century with Japan. Japan attacking Russia in 1904, and Japan attacking the U.S. at Pearl Harbor in 1941. And in both cases, it had to do with economic realities.
I think, Bill, let me interject something here too, because essentially, so what we've had happen in the last few years is a move, and this is perfectly correlated to me to the inflation situation, which Zoltan talks about in his report. There is a lack of trust about trade policies between the nations, which he says really got started with the United States view or a Western view that China was going to radically alter the world by taking over 5G. So it started with that, and then now we've got, and that's why we've got this issue with Taiwan, because they make most of the world's chips, and I think most of the world's chips that are used in weaponry and
Yeah, the U.S.
high tech.
imports about 70%
Yeah,
of its computer chips from
yeah. So
Taiwan.
there's a lack of trust there, and we've got this theme uh, away from globalization, which has really kind of been happening since, the end of World War II. We've had this long globalization thing, the huge, really since the end of the Cold War, I would say, more so. And now we're moving back to nationalism,
Correct.
and which really gives us less and less access to goods, and it's causing all this infighting, founded really upon, you could argue, a lack of trust.
Well, and and the last administration pointed out to the American people that China, in particular, was taking advantage of globalization, and the
Hmm.
U.S. economy. We've benefited from cheap imports from China, but the cost of that has been an offshoring of our manufacturing base, and with that, we have become economically dependent to China and other Asian manufacturing countries, and we're seeing the harm in that. So, and this was something that's come out in this paper by Zoltan. He writes about these two strategically important economic blocks, one being Russia and Europe, and the other being China and the U.S. And in both cases, these parties have mutually benefited from these relationships. All right, so Europe has benefited from cheap Russian natural gas. The US has benefited from cheap Chinese imports, as I said. But now these relationships are at risk. And the two flashpoints that we're seeing are, in the case of Russia and Europe, it's Ukraine. In the case of China and the US, it's Taiwan.
That's exactly right. And you talked about, speaking of macroeconomics. I mean, he takes this a step further. You could call these secular trends in place, but
Mhm.
also we're at the edge of a cliff where essentially Zoltan is actually declaring this as a new world order. And he's saying this is about a commodity based China led, or commodity based China and Russia led monetary order. He's calling that Bretton Woods
Bretton
3.
Woods 3.
So,
I mean, we could see something like that down the road. I mean, that's what he speculates. But in the meantime, right now, because we've talked so much about inflationary risks and rising interest rates, well, let's just say, for argument's sake, that inflation in the U.S. is peaking, and there's evidence to that effect. Well, as Zoltan points out, there's three pillars of a low inflationary world: cheap immigrant labor, cheap Chinese goods, cheap Russian natural gas. Well, we'll start with the last one. Cheap Russian natural gas, that's at risk. Cheap Chinese goods, that's at risk. Cheap immigrant labor, I don't know. But if we do see more saber rattling from China and Russia, and these economic relationships are in jeopardy, then the inflation will likely remain. It will be more durable than we would hope.
well, I'd like to give an example of this, Bill. If you look at what's happening in the UK right now, um, um, I mean, we're actually the price of natural gas, for example, in the United States yesterday was um, $9.26 per million British thermal units. It's 10 times that.
That's
in
correct.
Europe. It is 10 times that. And that is I mean, and what does that mean? We are seeing hundreds and thousands of businesses in Europe right now as we speak, or in the last 30 days. Restaurant closures. It's almost like another pandemic type situation. We're seeing restaurant closures, bar closures, business closures, because the owners of these businesses cannot pay their electric bills.
Government takeover of critical infrastructure companies because they're failing.
Yeah. So there really needs to be a rapid solution to this problem, or I mean, Europe could be facing a depression.
I posted this on our Facebook page as a comment to the post with this report. And there's a graph that I posted showing the price of natural gas that Europe pays. And it has increased tenfold just in a year and a half. It has spiked that much. Well, Europe, despite their use of nuclear power and green power sources, still rely very heavily on natural gas for electricity production. So with the natural gas prices spiking tenfold, there's been a corresponding approximately tenfold increase in electricity costs. So can you imagine, let's just say your electric bill runs, I don't know, what does your electric bill run?
$300 a
right.
month.
$300 a month
in the middle of summer when it's the worst.
What if next month it was $3,000 a month?
Well, this is what they're facing. I mean, I read several stories, comments from like a pub owner. Okay, they have a pub that's 2,000 square feet, and their electric bill's gone from 1,000 to 10,000. Okay, $10,000 a month just to pay the electricity.
I had the pleasure of seeing an old Army friend a couple of weeks ago in New Orleans, and he and his wife live in Germany, outside of Munich, and he was telling me about the spike in electricity costs, and he was not joking. When he and his wife were discussing the possibility of going to a family member's house that has wood burning stoves or wood burning for their electricity or their heating. I'm sorry, their heating is wood burning sources, and they were talking about going there this winter if it got too cold. I mean, that's how severe this is, and we take that for granted in this country because we have an ample supply of natural gas and oil that we can utilize. But in Europe, they're in a real pickle.
Oh, absolutely. Yeah. So where else are you going with this?
So
today,
I think the big takeaway is, we all need to be paying attention to what's going on in the world around us. For sure, Russia has Europe in a stranglehold. It is economic blackmail. China potentially has the U.S. and the rest of the developed world in a stranglehold.
Yeah. So
they did a naval blockade of Taiwan recently. Well, they backed off, but what if they were to do a permanent naval blockade preventing trade in and out of Taiwan? I mean, that would have devastating repercussions.
Yeah, I mean, this is the thing to watch. The trade relationship between Russia and Europe, that long-term relationship. I mean, Russia's really part of Eastern Europe, but between Western and Eastern Europe, I mean, it's now Russia Russia's ceasing trade with them in many ways, and that relationship has shifted to Russia and China.
Absolutely.
And the same thing with U.S. and China. It looks like we're heading into an era where you're going to see very few things with a stamp or a label on there in the U.S. that say "Made in China."
Well, that will take years, but that may be the end game. But in the meantime, for that to happen, we need to expect higher costs.
But there's a lot at stake here too. There are peripheral relationships, like for example, South Korea.
Mm-hmm.
You know, you read this about South Korea. We sent Nancy Pelosi goes to Taiwan, then flies to South Korea, and the prime minister of South Korea would not visit with her. And this is alarming because we've had 30,000 troops over there in South Korea for a long time, ever since the Korean War conflict. And this could wind up being like another Afghanistan, as China is wooing the South Koreans. And here we go again. You know, these are issues of trust. Look, then you look at what's happened with American and Saudi Arabian relationships. Throw Iran in there. Throw Turkey in there.
A NATO member, which has its own bilateral relations with Russia. So you have countries like Turkey, South Korea, and others that have historically been U.S. allies that are now having to weigh those relationships with their dependence on our enemies.
So what does this mean?
Well, from an investment standpoint,
yeah,
you know, and I think this is really interesting at the end of the report. You know, what Zoltan points out is that with this shift, the West will have to pour a lot of investment money, trillions, into four things that he writes: rearming. So to defend the world order, we have to rearm. You know, we're reading about all the arms that we are sending to Ukraine. Well, you know, we all enjoy.
Guess where they're getting their chips from? A lot of them now. There's 250 chips it takes to make a Javelin tank killing missile.
Well, that's right.
And they're getting, we now have a shortage of washing machines because there are large industrial companies in the U.S. and other places that have purchased all the washing machines to take the chips out of them and try to figure out how to retrofit these weapon systems with washing machine chips. Unbelievable.
So, you know, we're reading about Russian defenses being depleted, and you know, Russia is sending its last reserves of tank forces to Ukraine. Perhaps that is correct. We're also reading about, you know, Russia depleting its missile stocks. Well, guess who else is depleting their military? The U.S., because we are depleting stocks of arms that we are sending to defend Ukraine, and we can't easily replace
dangerously low levels.
Dangerously low levels.
I've read.
So, from an investment standpoint, rearming. The second one is reshoring. So this is the opposite of offshoring. So as you see countries in the West bring their manufacturing back home, that repatriation of industry, that's going to require a lot of investment. The third one is restocking and investing in commodities. You know, commodities has become another tool of blackmail. So let's just take the EV industry. One of the things that we need to remember is that these electric vehicles require batteries, and those batteries require natural resources that a lot of that we depend on countries like China for sourcing. Well, look at what's happening in Europe. They lack the natural resources to operate their power grid. And the fourth one is rewiring the grid, okay? Power. So, yes, you're going to see a big push to get to other sources of energy so that you're not dependent upon the Middle East, you're not dependent upon Russia, but that takes time. And you can't go too quickly because you will jettison your economy. You will go into recession very fast if you go too fast into that next step. You've got to use what you have right now as you transition.
Yeah. So just to go along, you hit on this. So we want to have, it's a season to be very very diversified, and you need to watch what you own that's interest rate sensitive, or own things that are potentially interest rate insensitive.
Own price takers, companies that get to set the price on the products they
Absolutely.
sell.
And that includes a lot of, you know, commodity.
Mhm.
I mean, so you have to have things that are an inflation hedge, including commodities, adjustable rate fixed income, for example, interest rate insensitive, power you mentioned, that makes sense. So yeah, that's good, William. So we thought that was important to discuss today at a time when a lot of this, interest rate insensitive. We've got higher interest rates coming off of the Jerome Powell and our Federal Reserve and other central banks coming out of Jackson Hole look to be tightening for a while. We're going to have to see. The Fed meets 3 more times this year. Goldman said today we're going to get a 0.5% increase at the next meeting in approximately 10 days.
Could be higher.
Could be 0.75%, but it's going to be data dependent. And we actually at this table believe that Jerome Powell is committed to fighting inflation. And he has already answered critics and told them pretty much at any cost, there might have to be some pain. So you might go through your portfolio and find out what could get painful, or have us take a look at it. But I thought, sporting news in the conclusion, we've got the U.S. Open, and Serena Williams has made it to the round of 33, which she has every time.
But you know who's not there?
Round of 32, the third round. Who's not there?
Djokovic.
Oh, Djokovic's on the men's side.
Yep.
Because he's not vaccinated. That's been highly controversial. So the men's singles matches, we still have the 1 and the 2 seed, Medvedev and Nadal, and that still makes for a really good. Nobody ranked on the men's side in the U.S. And then hopefully we'll see Serena match up against. She knocked off the 2 seed. And how do you pronounce the Polish lady's name?
Oh,
Swiatek?
That's a tough one.
Yeah, I don't know how to say it.
I don't even want to attempt it.
Okay, but LSU football fans, we are underway. College football season, week 1. We had week 0 last Saturday with a few no names. Week 1 started last night.
Hey,
underway.
Louisiana Tech played last night.
They got annihilated.
But they still played.
They played. I would have.
Missouri.
It's a good thing I didn't bet, because I thought they would have played Missouri a lot closer, and I wound up. I don't know how it ended, but it was starting to get ugly. So LSU is a 3.5-point favorite against Florida State University, and we have some question marks out there about LSU this year, about Brian Kelly. Who's going to be the starting quarterback, and how's he going to do? Jaden Daniels or Garrett Nussmeier? I don't think we're going to get the answer to that until they take the field on, unusually, Sunday in the Superdome for this Labor Day weekend. That ought to be a real treat. And then we get the Saints and the NFL kicking off. Not sure when the Saints opener is, but we've had a breather after the preseason, and NFL kicks off a week from yesterday. So that's our story for today. We're sticking to it.
Yeah, enjoy
And
enjoy your Labor Day weekend. Markets are closed Monday, obviously. Banks are closed. So we'll be back in the office Tuesday.
peace out.
Cheers.